Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here for a very important live show. We are back for the morning forecast. So thank you everyone for tuning back into this show every single morning. Whether you're watching live or later, I do very much appreciate it. And there's going to be a lot of information in this live show. And when I mean a lot, we've got a lot to cover. The Fed minutes came out yesterday and there's lots of things people aren't looking at, and that's what I want to dive into. We've got Jerome Powell speaking live as well, so we'll be getting ready for that as well. Trump is not too happy with everything going on, so let's see. Our rate cut's going to happen in September. No one knows for sure yet, but the Fed minutes, you can take away a lot from the Fed minutes, but that came out yesterday, and I don't think the markets have fully understood what it was all about. So we'll dive into all of that in today's video. Thank you everyone for tuning in. Make sure you are hitting the like button. Make sure you have subscribed already. We are on the final stretch to 100,000 subscribers. Thank you for everyone who joined us before 100,000 subscribers. We're going to be giving prizes out left, right, and center. We're going to be having a very fun 100,000 subscriber party. There's one more thing I've got planned. I won't tell you about it yet, but we're going to be having a party on my show as well. I'll give you a couple clues. We've got quite a few of these, and we're going to be doing something quite fun there. We're also going to be giving away different sorts of stuff. Merch might be given away. Lots of merch might be given away. We're also going to have the main event, which is the $1,000 giveaway as well, once the timer runs out on that as well. So whether or not we hit 100,000 subscribers, we're giving away the $1,000 worth of XRP as well. I'll give you all the links. It's also in the description if you want to go and get it, but I'll give you the links if you're watching live as well. First live for me. Excited to be here, says Jansen. Welcome into the live show. This is Martyn Lucas Investor Channel. I'm a broadcaster here. I do the morning show and then we go straight into Martyn. I'm sort of the pre-act and he's the main event, but we've got a lot to dive into. This is what we're looking at on the screen right now, is our very own newsletter, published about just over 10 minutes ago now, and what we're going to be doing is going into all the details, especially from the Fed minutes that was released yesterday. So if everyone can do me a favor, hit the like button. If you haven't hit the like button, then what are you doing? I know it's early morning for many people, but you can still press that button. Subscribe if you haven't done so already. 100,000 subscribers right round the corner. You want to be involved before we hit it. Prizes left, right, and center. So got quite a few top stories. I've added this section in the newsletter just so from a glance you can see what's going on. We've got the Powell Jackson Hole speech. We've got the $1 million price prediction from Coinbase CEO Brian Armstrong. We've got UK inflation hitting 3.8%, which is obviously very, very bad. That's CPI, not even PPI. And that could be what's in store for the US. We'll have a look at that shortly. China is now eyeing a yuan stablecoin. So that's an interesting pivot from China. They are falling behind and they don't want to anymore. And we've also got the Fed and Ripple lead crypto pivot. We had some very interesting news coming out yesterday, actually. Let me just get this up over there. Perfect. Very interesting that no one was covering apart from Martyn yesterday. This Fed Waller came out, Senator Loomis came out, we had Stewart from Ripple in the panels, a lot of information from there as well. But what we're going to do first is go on to the most important thing, I think, which is the minutes. The minutes came out yesterday. Some of you might not even know what the minutes are, but let's try and digest it together. This is what this is what institutions are looking at. This is what the big companies are looking at. This is what hedge fund managers are looking at. So just because it might seem a bit complicated doesn't mean we shouldn't be looking at it. Nick Jones says, Sensei, you upgraded the camera. Background looks clearer, or is it just because it's not as sunny out today in the UK? Cleaned the windows, upgraded the camera. There we go. It's hopefully you are enjoying the new visuals. Thank you, Nick Jones, for noticing. Okay, anyway, more importantly, Doesn't matter how good I look, it matters what's going on in the markets. It's the deeper dive. July FOMC minutes explained what retail investors need to know. We are in a very, very sticky situation at the moment. Trump said tariffs won't affect inflation. They have. Oh, Motto A Team is in the chat.
Motto A Team has become a member. Sense a look in very sharp today.
Thank you very much, Motto A Team. Do appreciate it. Thank you for being a member for 8 months. Even Thor Steen Wiener saying the whole picture is looking sharper. Jesse is saying thank your wife from us. Yes, I will. She does appreciate all the comments. Okay, so very sticky situation. Pardon the pun, but inflation is sticky at the moment. We are either heading up or we're not really heading closer to our 2% target. The other issue on our hands is unemployment is going up. And to bring inflation down, you keep interest rates high or you increase them. To sort out the labor market, you bring interest rates down. So the Fed is in a sticky situation, and if inflation in the CPI print that we get, I believe it's on the 11th of September, again, the most important CPI print in the last 4 years, in my opinion, because that will tell us, are we going to get rate cuts or not in September? That is our final straw to see what's going to happen on, is it the 18th of September, the FOMC meeting? Let me check that. The next FOMC meeting is in 27 days, so maybe a bit 17th of September, yeah. And that will be our final clue into what the FOMC meeting will look like in September. But remember, we start getting ideas from all these events that come up, whether it was the minutes yesterday, whether it's Jerome Powell tomorrow. This is going to start consolidating what we think is going to happen. So please, you guys, notice the upgrade, says Martyn. Mehmed says, is the newsletter free? Well, most of the newsletter's free, but the people that want to support the show, the people that want to get access to the deeper dives, for example, this story here, we don't normally go through all our deeper dives live on the show, but today we are because it's something everyone should know. If you want the access to the chart of the day on the newsletter, then it is a premium service. If you want to talk to me 24/7 on direct messaging me on the newsletter platform, it's a premium service. If you want to access the community, it's a premium service. So you do get a lot out of the premium service. I'll give you the link for it anyway. This is the link for the free version or the premium version. I'll give you the link now. Where is the link gone? There it is. I'll give you the link for that now. Basically, once you click that link, you've got the choice. You might as well try the 7-day free trial of the premium newsletter, and then always you can downgrade or cancel that before it charges you. But there is a free one, there is a premium one. Go and check it out. So the deeper dive today, July FOMC minutes explained. Let's dive straight into it. The July FOMC minutes revealed a Fed stuck between tariff-driven inflation and a weakening labor market. For anyone who says tariffs won't affect the consumer, tariffs won't affect inflation, unfortunately, the data is now here. You are wrong. Tariffs will have an effect on the economy, and now we are seeing it. We saw PPI print last couple weeks ago now. Actually, was it last week? Anyway, in the last 10 days, we saw PPI, and it was very, very up. PPI was a big shock towards the upside. Remember, PPI is producer price index. It's sort of what's happening up the river. What are the producers feeling? What are the companies feeling? If the inflation's up for them, well, then they've got a choice. Can they absorb that cost and not pass it on to the consumer? Or have they run out of inventory pre-tariffs? Can their business not hold up anymore? Is interest rates already too high for them to start subsidizing these costs? If so, then they're going to bring it onto the consumer. And that's why next month, 11th of September, we're looking at CPI to see if it is coming into the CPI data. And if it is, then we possibly won't get as many rate cuts as we're hoping for. We might not even get a rate cut this year. Okay, so The July FOMC minutes, remember this is sort of the backbone of what's going on, the internal discussions. It sort of gives you a heads up of what they're talking about within the Fed. People don't really look at it, but once you dive into it, you get some important bits of information. And we're actually going to go through specific quotes that we get within it as well. It looks like there's a lot. There might be a lot, but you need to stay tuned so you understand it all. We've got specific quotes that I've pulled out from the actual PDF itself, and I'm going to be explaining to you exactly what that means. And I'll be doing it in hopefully within half an hour. So you need to watch this if you actually care about your investments and want to know what the hedge funds are looking at as well. This data is available for everyone, but retail investors don't normally dive into it. And hopefully that's what we're changing right now. The 9-2 decision to hold rates at 4.2 to 4.5% masked a rare split. Remember, this is what happened last FOMC meeting. Yes, we did hold rates, but for the first time in years and years and years, there was actually 2 Fed governors that didn't go with the consensus. They voted against holding and voted for cutting. And we can argue, is that right? Is that good? Does that show the independence? Does that show it shows independence for sure? It shows people can disagree on matters, but does it show stability? Because the market cares about stability. And if people are disagreeing within the Fed themselves, if this disagreement keeps getting bigger and bigger, it might expand to something which shows uncertainty in the market. And the market hates uncertainty. The market hates something that's not stable. And if the Fed's not stable, and the Fed is one of the most important powers for the economy to keep everything in check, then we are certainly in trouble. And this might be the first glimpse we have got of that 9-2 decision. The key shift is language. This is sort of an overview of what we're going to be looking at. The key shift is language, that rates are not far above neutral, suggesting policymakers think we've already squeezed most of the restrictive pressure out of monetary policy. Markets are now seeing about an 85% chance of a September cut. That is still priced in, don't worry. We are still looking at a September rate cut. Excuse me. I really did clean up the studio yesterday. I know, must be some dust in the air. So, markets now see an 85% chance of September cut. We already know that. We are looking at that. That updates on a regular basis. Currently, looking at... let me look at some of these. Excuse me. Don't know what's going on. So, what is the latest figure as of right now? We are looking at about 80% chance. So, slowly but surely, it's now looking less and less likely we're going to get a September rate cut, but still overwhelmingly likely. 80% chance of a rate cut at the moment. But post a meeting, labour market makes the minutes look dated. Jobs growth. Remember, the minutes aren't from the latest data results. They are taken back from July. So keep that in mind. Job growth has collapsed to just 35,000 average monthly gains over the last 3 months, with 258,000 jobs number revised away. I have no idea what's going on. Excuse me. So, what's new versus prior minutes? What does this minute show that other minutes haven't shown? There has been key additions and escalations. Tariff effects explicitly acknowledged as driving goods inflation. This is the first time we've got in the wording that tariff, and I said this at the beginning of the stream, tariff effects are now acknowledged explicitly, the tariff effects itself, as driving goods inflation. We have now got that written down. We have now got that confirmed by the data. And now they're saying it's the tariffs that are now driving goods inflation up. A new addition, a new statement that the policy rate, and this is a quote, may not be far above neutral, absent from June meetings, from the June minutes. That's new language. More detail on tariff pass-through. We've got stockpiling, contract repricing, and firm customer dynamics. Warning that job gains are concentrated in a few industries, making the labour market Federal. Liquidity, standing repo facility usage hits 11.1 billion as reserve edge towards ample threshold. We've also got tone shifts. We're going to be explaining this in more detail as we go down, but there's also tone shifts. There's more hawkish on inflation. A majority saw inflation risks as tilted upwards. We're now getting a tone shift. We're now looking at inflation. Now there's more fears that inflation is going to be sticky, and not only sticky, but heading up. That's the Fed's worst nightmare. This is my worst nightmare. This is the one thing that can stop the crypto bull market. The one thing that can, not the one thing, you can always have sort of black swans as well, but the one big risk of investing right now. And again, if you're investing long term, things like this happen. You have recessions, you have crashes, and then you go forward. But if you're in leverage, if you're investing into the day-to-day market, if you're trying to keep some money on the side to buy a correction, well, you might start seeing a correction. This is the one thing that I'm a bit worried about, and it's inflation. And it's the fact that PPI is now up. If that starts going to CPI and we start seeing inflation go up and up and up, well, that will cause a market crash and correction, in my opinion. Remember, nothing I say is financial advice. It's my thoughts and opinions only, so please do not buy or sell based on anything I say. I'm not a financial advisor. Please do speak to your financial advisor about this. I'm sharing my thoughts, my opinions, my journey. I really do want to make that clear, because I don't want anyone coming here and now selling everything because they're worried about a crash. I don't want anyone coming here and buying everything because they think it's going to go to $1 million. That's not what we're here to do. We're here to share our journey and create a community. So, more hawkish on inflation. A majority saw inflation risks as tilted upwards. That's a tone shift. They're also more cautious on jobs. Labour weakness was flagged, but immigration complicates the data. Greater data dependence. Stronger emphasis on reacting to incoming reports, not preset paths. Now we're going to go into the meat and the bones of it. We're going to get into some of their quotes and what's actually going on. Let me just see. Did I show you this earlier? We're going to get ready for 100,000 subscribers. I've got a whole box. I've got a whole box of this. Poppers. 100,000 subscribers. We're going to be doing a special event show where I'll be hosting it after Martyn does his hosting event, and we're going to be doing a very exciting show. So I hope you all start looking forward to that. So, policy path, rate cuts, and reaction function. The Fed baseline. This is what we're expecting. 2 to 3 possible cuts by year end, but condition on tariff and jobs data. And what is the Fed Watch tool saying? Well, if we go into December of 2025, it's now slightly not pricing in 3, is it? 1 rate cut, 2 rate cut. So we're between 2 or 3 rate cuts. So slowly but surely, it looks like it's looking more likely to be 2 rate cuts instead of 3 this year. And that's not what the market was pricing in at the beginning of this year. It's not what it was pricing in last month. But ever since PPI data came out, it's now only pricing in 2 rate cuts by the end of the year. Neutral rate cuts seen around 3%, implying 125 to 150 basis points of easing space. Markets versus the Fed. September 2025, there's about an 80%, we just checked, it's now 80% cut probability. December 2025, markets pricing a total of 2 cuts. Disconnect. Fed more cautious than market pricing. Conditional triggers. Dovish. Labour deterioration or inflation easing with expectations anchored. Hawkish, tariffs proving persistent or long-term inflation expectation rising. So this is when you start hearing people talk about hawkish and dovish, now you know what we're talking about. And here we go. We're going to start getting a bit more into it. We've got 451 people watching. Thank you so much for tuning in. Make sure you are hitting the like button. Make sure you are subscribing. There's going to be prizes all around for everyone who's getting engaged, liking us on X, reposting on X, subscribing to the free newsletter, hitting the like button. There's also a $1,000 giveaway in XRP. We are on our road to 100,000 and we won't stop until we get there, and we will keep going after as well. But make sure you are hitting the like button and subscribing. We're covering the Fed minutes right now. Diving into it, don't worry, we haven't even got into the meat and the bones of it yet. Some direct quotes and my thoughts on it. But this came out yesterday. Hedge funds, look at this. big companies look at this. You're looking at institutions looking at this, the BlackRocks of the world looking at this. The retail investors don't really tend to look into it, but it gives us a good idea of what's happening behind the doors. The one caveat is, even though it was released today, it's actually about last month's FOMC meeting, and it was only, it's about 20-30 days out of date, but it gives us a good idea ahead of Jerome Powell's live speech, which will be coming live on the show. David Hensley. Let me go to the comments for a second before we continue. Yeston says a rooster cam at 100,000. That would be quite an interesting thing to do. I've never seen a more professional newsletter that is so jam-packed full of nothing but factual info. Hands down the best. Sensei is now officially the Sensei of newsletters. Beyond impressed, Sensei. Thank you so much, David Hensley. And as you've been seeing on the premium discussions, we're asking for your feedback. We're asking how do we make it better for you? What else can we add to you? We're looking at adding different products that you just get for free for being part of the newsletter. So if you want to take advantage of that, that's the newsletter link. So David Hensley, it means the world. Thank you so much. Let me just go into some of these comments before we get into the big meats and the bones of it all. Bless you, rooster in the office. No rooster in the office. I don't know what's in the office. Plot twist. This is AI, not Sensei. Says Yeston. Nope, this is me. This is me, Yeston. When does the Powell speech start? So Powell will be speaking live tomorrow. It's not today. It's tomorrow. We've got the minutes. We're digesting them now to get prepared for the Jerome Powell speech tomorrow. And I'll be hopefully calling into Martyn's show. We might be doing a show together on that because I might be trading it live as well. I need to check on the time, but don't worry, we will be covering the speech live on the show. But you need to understand that what's happening in the background. You can't just go into Powell's speech and not understand anything he's saying. You need to understand what is going on in the background before you start tuning into what Powell says live on the show, because you'll be listening to him, but you have no idea what any of it means, potentially. And that's what we're trying to do right now, is diving into what the Fed minutes came out and said on Wednesday, because that's probably what he's going to be talking about and understanding it all. I have to, bless you, thank you. I can't wait for Powell's speech. Yeah, neither can I. It'll be tomorrow. What time is it? It's in the newsletter. I'll come on to it. I don't want to lose our place, but it's tomorrow. Oh, wow.
Adole Gunderson IHH donated 100 Norwegian kroner through a super chat. Hello Sensei, any thoughts on Chainlink link? It seems to be rising in line with ETH. Do you think it will play an active role in the adoption of crypto into the years to come?
Thank you for your question. I do like Chainlink. I like Chainlink. Obviously, it's an Oracle cryptocurrency. All of that data and all of that sort of stuff, very important. But I think Chainlink will do very well. It's shown a lot of strength. We've even seen the founder of Chainlink be very close to Trump. A lot of the Chainlink fans love that. So I do think Chainlink will perform well. I think it will actually outperform Ethereum once you start looking at the low to high in the bear market to the top of the bull market. Do I think it will play an active role in the adoption of crypto in the years to come? I'm sure it will. It has proved itself. However, there is some of the technology behind Chainlink is not the best, and that's why I start looking at other tokens that do the same, because it's a very important part of the cryptocurrency market that Chainlink is filling. But there is a token called Flare, which also does what Chainlink does, but I think a little bit better, and it's a much lower cap coin than Chainlink. So I don't actually know if I own any Chainlink. There's no specific reason why I don't. It was probably already rising in the bear market when I started to buying these tokens. I think it already went on its run or started. So I don't think I own any Chainlink. Would I be opposed to owning any Chainlink? Is there any reason I'm not? No, I would love to own some Chainlink. I'll just have to find a good entry for myself. But I own Flare. And at least that way I am exposed to what's going on in that sort of the Oracle side of crypto technology. So I like Chainlink. Thank you for your super chat. It is rising alongside ETH towards the end of the bull market if we do continue on course and we get that altcoin season that we're expecting. then I think it will outperform Ethereum. And yes, I do think it will play a role. Thank you very much for your super chat. And I like it when people ask questions like that. They're talking about actual cryptocurrencies that have been around for a while, that have been proving themselves, that are making higher highs, higher lows, rather than some random tiny little cryptocurrencies that are just going down, whether it's a meme coin, whether it's a terrible coin. Nothing wrong with investing in them, but when you're investing in them, you don't really ask questions about them. You just put a little bit in it, high risk, high reward. But stuff like Chainlink, you can make enough money with them. So there's no real need to go down the risk curve. We're going to come back onto the Fed minutes. We'll come back to that, just reading a couple comments, and then we'll come back to that. We've got a poll running right now in the chat as well. Is inflation going to get out of control again? 49% of you say yes. Well, that means 49% of you are expecting a major correction in the markets. 30% of you say no, and 21% of you say a little. We'll keep that running, and then we'll dive into the results shortly. Did you get your poppers on Amazon? I got to get a few for the event, says Master. Yeah, I did get them on Amazon, but I'm here in the UK, so I don't know if you've got the same versions. I'm really tempted to just pop it right now. If we get a $50 super chat, I'll ruin the studio that I just cleaned all yesterday and pop it as a trial. Rooster Cam at 100k. No, okay, let me just go down the comments. Walmart missed earnings. Yeah, it was. That's what's sort of bringing the S&P 500 down today as well. Chainlink is nice under 20 now. It's at $26. Chainlink nice at under 20. It's 26 now. So okay. Yeah, it's a bit too high for me to buy now. Not a fan of Voom. I go to is QQQ, but Sensei got me on that Archer. It wasn't me. It was Vaz. Blame Vaz. I just do the chart analysis. And oh my god, ETOR at a 50% loss year to date. I don't know what stock that is. This channel took over my TVs. No more Bloomberg all day watching. Yeah, there's no need. We're better than Bloomberg. We don't have 20,000 advertisement breaks and 20,000 sponsored people coming on the show. We give you all the events as they happen, and you get a community. It's amazing. Test run. Good idea. Don't want any dudes. I don't know what you mean, Master. Yes, I said I'll do a test run if we get a $50 super chat. But I sort of hope we don't. Anyway, back to the Fed minutes. This is what we're a bit off course, but this is what we're getting back to. Now we're getting into the meat and the bones. So this internal disagreement we're going to come into now, and that's a bit concerning, and also the risk balance. Bauman and Waller. We'll come on to Waller again because he actually gave a very good speech yesterday for crypto at the Love Crypto event that Martyn covered live. We'll come back to Waller, but these are the two people that voted against holding the rates and wanted a rate cut. Remember their names because they might be the next Fed chairs. Anyway, arguing that that excluding tariffs, inflation is near 2% and jobs are clearly deteriorating. They see tariffs as a one-time shock, not lasting inflation. So these are the two people. This is their argument. And fair enough. They have this argument. Is it true? Is it not? Is it going to happen? We don't know. But they're presenting the argument that most of us will hope this is true. They wanted a cut. They say that inflation is close enough to 2%, or even if it's not at 2% yet, you can afford to bring a few rate cuts into the play. They're saying bring rate cuts. Inflation is near 2%. The job markets are deteriorating. You need to bring down interest rates to sort that out. And tariffs, yes, we've seen a little rise in PPI, but it's only going to be a one-time shock. It's not going to be lasting. That's their argument. Then the majority of the officials have said most officials judged inflation risk greater than jobs risk given tariff uncertainty. Their argument is unemployment is slightly ticking up, only slightly. We have a big risk right now. We haven't seen this before. We don't know what tariffs will do to the market. We need to wait and see more data. The economy is in a fairly good position. unemployment is not skyrocketing. We've got a stable economy. We can afford to keep rates at these levels. And if we keep rates at these levels, we've got data that is sticky. We don't know what tariffs are going to do. We've just got our first sort of sign of what tariffs are doing with PPI. We need to keep interest rates here until we know more data. That's the majority position. The hawks fear inflation expectations could unanchor. The doves fear trade-offs if inflation stays high but jobs weaken. The compromises, Fed will weigh how far each variable is from its target over different time horizons. And now we're going to get into the inflation diagnostics. The current state is PCE is about 2.7% in June, barely lower than a year earlier. Not much progress made in a year. Goods inflation rising from tariffs, while service inflation stays slow. Trump's tariff transmission. Pass-through is gradual, stockpiling, repricing contracts, and suppliers absorbing model costs. Forward view. Staff projects tariffs to lift inflation through 2026 before falling back to 2% in 2027, but with a considerable uncertainty. The recent data we got was July CPI was up 0.2% month on month, about 2.7%. Core CPI was up 0.3% month on month, 3.1% year on year, the biggest monthly gain since January. And this was the big bad one. The July PPI was up 0.9% month on month versus an expected 0.2%. Now we're going to look at the labour market. Do stay with us because we're going to get into more important quotes and getting prepared for Jerome Powell speaking. So the labour market and growth. The jobs outlook. Unemployment at 4.1% in June, but July's payroll added just 73,000 versus 110,000 expected. 3-month average is 35,000 jobs, well below the trend. Unemployment is heading up, jobs added are low. Softening signs. Jobs growth narrowly contracted, higher joblessness for black workers and youth, wage gains for job switchers falling before stayers. We'll move on to, we know what the jobs market is doing. It's unemployment's heading up, but not too bad. Balance sheet, liquidity and plumbing. So the QT status, the quantitative tightening status. Balance sheet runoff, proceeding smoothly with reserves still abundant, but drifting lower. SRF usage, repo facility hits 11.1 billion at quarter end. Some officials want more study of central clearing. Liquidity wash points. Reserves could fall sharply on key settlement dates, requiring intervention on RRP declining as Treasury rebuilds its cash balance. Financial stability watch points. Asset valuation stretch. Equity price to earnings at historical highs. HY spreads near low. Bank risks. Duration mismatches still an issue if long yields rise. That's a major concern about the long yields, the 10-year yield and all that sort of stuff. If those start really rising, then we've got a market correction on our hands. And what I'm explaining there is the long end of the curve. If the 10-year yields start really rising, and the only way they will start really rising is if everyone starts believing, and this starts to happen, inflation starts going back up. If inflation starts going back up, everyone's going to get out of assets or risky assets. That could be the stock market, the crypto market. And they'll be flocking to bonds because then they can lock in a 10-year yield of 5%, 6%, and then risk-free money. Why would you invest in the stock market when you can guarantee 5 to 6% for a long time horizon? Non-bank risks, so that would be a major concern. That would be a crash. And the way we're going to figure out if that's going to happen is if we start seeing next month's inflation numbers, whether that's CPI or PPI, which we'll be covering live on the show, if they start going up. Non-bank risk, life insurance shifting into private credit, hedge fund leverage concentrated, stablecoins, Genius Act could expand stablecoin use, boosting treasury demand, but raising policy risks. Geopolitical and tariffs. And here I'm going to give you all the risks and what we need to look out for. Fed expects tariffs to lift inflation in 2025-2026 with uncertain growth effects. Spillover foreign economies already see drag, including Canada's contraction and slower global trade. So these are the risks. These are what we need to look out for, and this is what the Fed will do. I put this table together to make it a bit simpler for all of us to keep an eye on. You can even, if you're on the newsletter, you can go and take a picture of it, save the image. If you're watching live, I don't mind. You can take a screenshot if you like. Let me just bring it into the page. So on the left, we've got the risks. The risk is persistent tariff inflation. What we need to look out for in the market is core goods inflation is if it starts going up 0.3% monthly, services excluding housing acceleration. What the Fed will do if we do have persistent tariff inflation and we do start getting those market signals is they will extend the pause through to Q4 of 2025, raise terminal rate expectations. So we'll start looking at less rate cuts, and they'll keep waiting for the data. They'll probably won't even cut rates if we keep getting persistent tariff inflation. Labour market collapse, unemployment. If unemployment starts going up, and this is another risk, big risk, and that's the labour market collapse. How do we know if that's happening? Well, if unemployment starts going up above 4.5%, payrolls if they're less than 0 for 2+ months, that is our signal to go. This could lead into a recession, a crash. Good news is what they'll start doing is an emergency intermittent cut, aggressive easing cycle. That's when you start getting emergency cuts. Rates will just keep coming down and down and down because that's even worse than inflation. Unemployment starting to head up. We might get emergency rate cuts, but remember, when you hear the term emergency rate cut, you don't look at it and go, yes, this is amazing, we're getting an emergency rate cut, rate cuts are coming down. The reason you're getting an emergency rate cut is because something terrible is happening in the economy, and that will be very much to do with unemployment. So that's, again, your risk is labour market collapse. The signal is unemployment up above 4.5%, and the Fed's reaction will be an aggressive easing cycle and even emergency rate cuts. Financial stability event. Credit spreads widen, 100 basis points bank funding stress. Deploying lending facilities, pause quantitative tightening, potential emergency cuts. If we start getting some instability. Unanchored expectations. 5-year break even over 3%. Michigan sentiment inflation over 4%. Hawkish communications, potential emergency hike. We can get emergency hikes as well. Don't forget about that. Recession indicators. If the yield curve inverts, the GDP is under zero for 2 consecutive quarters, well, we're in a recession, and then that could lead to rate cuts to effective lower bound, and then restart quantitative easing. Remember, recession will come. We'll probably be we'll only find out we're in a recession after we're already in a recession, so we'll probably already crashed. We might crash a bit more. Historically, in a recession, great time to buy, and you come back out to lots of money in the system, the money printers going printing, quantitative easing, and lower interest rates. So terrible to start with, terrible for businesses, terrible for people losing jobs. But if you're investing in the market, historically, quite a good time to invest. Also, another risk is political pressure. Trump dismantles / threats, mirroring confirmation challenges, and what will happen there is the Fed will maintain independence, rhetoric, possible dovish pivots for legitimacy. So those are the main risks, what to look out for, and what the Fed will do. If you are watching live, please do make sure you hit the like button, make sure you subscribe. And here is what you've been waiting for. We're going to get straight into it, onto the retail investor implications, the probabilities I'm assigning to each situation, and getting ready for Jerome Powell's speech. I just need to respond to this. What's the time now? Just replying to Martyn, he's getting ready for the show straight after this. So stay with us. Let me have a look at your comments. Then I'm going to go into my probabilities for each of these different scenarios. And then we'll get prepared for Jerome Powell and all that sort of stuff. So here we go. Martyn said it best yesterday. A person who goes bankrupt 6 times is a bit worrisome. Yeah, for sure. I've heard people say there's a fine balance, isn't it? If you make mistakes and you've gone bankrupt once, maybe even twice, well, at least you will look at that person and say, oh, well, they've already failed. They know what not to do. They've got some experience now. But if you see one person failing over and over and over again and going bankrupt 6 times, then you probably don't want to get involved with it. I don't know who you're referring to, all's SS3SS, but I agree. Good. I need this 2,800 payment to go towards XRP. Some of this 2,800 house payment to go towards XRP. Remember, even if you get rate cuts, there is, if you look at the economics behind it, it doesn't automatically equal lower mortgage rates. It can actually lead to higher mortgage rates. So you need to look into that as well. But overall, yes, it will start to come down. We all go on about interest and inflation, but they just print whenever they want and put our taxes rates up. I'm baffled. I'm sorry that you feel that way, Crypto Coins Elite, but I don't think there's anything sinister around it. It's just data and policy affects inflation and all that sort of stuff. We have a like button that is in critical condition. If everyone could please donate some taps to that like button. Doctors say it may make it. Yep, David Hensley, there we go. He's telling you to hit the like button again in a very beautiful way. So please do hit that like button. Subscribe if you haven't done so already. We're going to come back onto the retail investor implications in a second. Just want to go through some of your comments. I don't know. XRP is so controversial with courts stuffs. In my opinion, no one else digs in on RB. I don't know what you in RB been holding. Thank you for your thoughts. JJ 8ball is here. XRP rocket in a few minutes. What's happening in a few minutes? The court stuff is over with XRP officially just recently. Yes, thank you, David Hensley, for clarifying that for our new viewer. The Trump bankruptcy nonsense is silly. It was 6 casino product properties, and it all happened for restructuring debt in a 6-month span to restructure debt. Thank you, Bristol. I didn't know what we were talking about. I was just talking about bankruptcy as a general rule. Anyway, anyone who mentions us intentionally bankrupts themselves. XRP, XLM, Flare look like they'll print millionaires this year. I think they will, but we need to look at the risks. While the like button is in good condition, let me do that in quick. It's in critical condition. Yes, make sure you hit the like button. Insert shifty eyes. Oh, Nonny is here with his 2-year badge. Nonny, is that a 2-year badge I see? Wow, congratulations on your 2-year badge. What do you think about the rumours Amazon might join XRP? Amazon might join XRP. Well, that doesn't make sense. But if you mean Amazon might use XRP, it's all rumours. It's all probably fake news. We won't know anything until they officially announce it. So I'm sure they will in the future. It will help them. But there is no official rumours around that. When is Powell speaking? Powell is speaking tomorrow. We're getting prepared for it today. And it will be his final ever Jackson Hole speech. Do you know anything about Jasmine? I don't think it's the best token out there. I know it will pump if we're in a crypto altcoin season. So I actually own some, but only as it's sort of a meme coin. It's not a utility coin in my opinion. Tomorrow morning, Yes, tomorrow morning. The XRP technology is proven. Industry-wide adoption is inevitable. I agree. Another good crypto that is a nice project is AVAX Ondo Link. Love these, and I think they'll be do the great this cycle and long-term. Thoughts? JJ 8ball, thank you for them. I 100% agree, especially with Ondo. I think AVAX is underrated. Link might be slightly overrated in my opinion, but I think it will still perform very well. It's already gone on a quite big run at this point. But yeah, AVAX, Ondo, I love them, especially Ondo. I need to buy some AVAX. I don't even know if I've got any at this point. I did last cycle. They're doing, I think there is there an AVAX ETF coming out? Let me have a look at my X here. Is it here? I've got a picture of AVAX. Was it AVAX or something else? AVAX is Avalanche, right? Yeah, it is. Mind blank for a second. Yeah, so there is actually a 90% chance of an Avalanche Avalanche ETF coming out this year. So not a bad idea to load up on a Avalanche. Not for you, but for me. I'm not giving advice. Okay, we need to come back to the report. So let me go back here. Final questions. Yeah, I agree, JJ 8ball. Ripple becomes a founding member of TRM Labs. Beacon, any insight on this? No, I don't at the moment, but thank you for the news. After XRP peaks, would it be wise to take the scaled profit and shift it to altcoins like Solana, Mr. K. Keith, indeed. Very, very interesting point. So, and that's a difficult one. Because on the one hand, you would think XRP will peak, then the altcoins will continue, and then they'll peak, and then you have a correction. But you need to do it very right. And what I'm going to be doing is I'll take some profits from XRP, 70% of it I'll put on the side, 30% I'll reinvest.
At Poorman to Richmond donated $1.99 through a super chat. Morning fam, thanks for keeping us informed, Sensei.
Thank you very much, morning. Poor man to rich man, really do appreciate it. Thank you for supporting the show. So, anyone want to do a $50 super chat? I'll pop this right on the show. And we've got another 50 to pop on the 100,000 subscriber giveaway. I just want to see if that anyone will want to do that. Anyway, what I'll be doing is I'll take my profits from XRP, 70% of it I'll just put aside, not touch it, get ready to pay my taxes. And just put away, not think about it until the bull market is over. 30% I might reinvest into coins that are lower down that curve. Remember, it's Bitcoin, Ethereum, XRP, large caps. Then it's the altcoins that go mental. So then I'll start looking for altcoins. But remember, it's risky to put all of it back into altcoins and reinvest, because the peak might be there. There might be a black swan event. Everything might be crashing down. If XRP peaks at some point, it might line up with altcoins peaking as well. You never know. And you just want to make sure you secure some profits, because XRPs are expected to do another 2 to 3x from these levels, even a 4x is possible. But it will be annoying for you guys to make all your money on a very good token that you did a lot of research on, and then lose all your money on tokens you did no research on. That's my thoughts anyway. X is blowing up that Swift is driving to forward XRP trials. Yeah, it's all fake news. Thank you, David Hensley, for the links. That's their $1,000 giveaway link. That's the link to the merch shop. I'm watching coins that have real world assets, not promoting, just asking advice. Yeah, no worries. It's a good way of looking at it. What actually holds these real world assets? I can hear the roosters. Good. You can hear the roosters. The roosters are out and about. Today, FOMC. There's no FOMC today. We're looking at the FOMC Fed minutes. We're analysing that. Then we're coming on to live Jerome Powell speech, which is tomorrow. So, yeah. Do you think XRP can reach $30? I do, but not this cycle. I don't think there's any chance it reaches that. I really assign a less than 5% chance it reaches that this cycle. You would need Amazon to come out. You would need, it would blow past Bitcoin's market cap. Yeah, there's just no chance. Or like a 2% chance. That's my question. 70 keep, 30 invest. Thanks, Sensei. You're my favourite. Buy, don't sell. You're my favourite. Buy. Don't say anything to Martyn. Don't worry, Mr. J. Keith. Your secret is safe with me. I'm sure Martyn's not watching. Hey, Sensei, do you show your portfolio like Martyn? No, I don't. Martyn does something incredible that not many people do, and I can't even compete with Martyn. No, he shows everything live in the show. I do not. Literally had me locked for hours. Good vibes and morning. Love this channel. Great info, updates. How much XRP do you feel someone would need to make 100k? Let's say DC at $2.50. Oh God. I can't do the calculation live in my head when he's come back here, but I'd imagine XRP could go to 8. Can go for between. I think the target's $8 realistically for me this cycle, but I think XRP can go between $8 to $12 this cycle. So go and work back from there. And also remember in 2030, I am expecting between $50 and $100. So I don't know what your time frame is. What's everyone's thoughts on pudgy penguins? Sensei, my mate. Okay, we're getting back into it. What's your opinion on Japanese yen carry trade unwind? There's about a 43% chance right now of a rate. 43% chance of a rate hike in the Japanese next policy decision. That would be the highest rates we've seen in Japan since 2008. And that's the risk that we're looking at. And that can potentially start causing that unwind. We'll keep an eye on it. I think that meeting's not for another couple of weeks. So I'll keep you updated on that. The chances are quite high that they're going to start raising interest rates. But that doesn't automatically mean you're going to get a 50% correction. It could just be they raise rates and then we see another 10% correction. It depends how much they raise rates, what the outlook is. A Japanese carry trade unwind isn't a one and done. There's a Japanese carry trade unwind. That means we get a 50% correction. It's not as simple as that. There's a lot of data behind the scenes. It could be as simple as there's no effect. Unlikely. There's a 5%, 10% effect. Pretty likely. There's a 20% effect. Well, it depends how bad it is. So it's a sliding scale. It's not just as easy as if that happens, we get this amount of correction. $8, what? Mind blown. Is that too high, too low? Uli? Too high, too low? Send me 1 Bitcoin, please. Movie Hut. I wish I had a Bitcoin. Please don't ask for money. It's probably the silliest thing you can do. Thank you, says Yanni Boy. Okay, cool. Learn to make money, not ask for money. Who wants 2 USD, says I appreciate the rooster. Yeah, you can hear the rooster. I'm glad you can hear it. So, coming back into the most important part of this whole analysis. Remember, this whole analysis is taken from my newsletter. If you're enjoying it so far, you get analysis like this every single day. You can't afford to miss it. There is the link for the newsletter. Too high, says Uli. $8 too high. Fair enough. Most people would call me out and say that's way too low. I am optimistic, and $8, you're correct to challenge me on that in the right way, not challenge me and say that's way too low. You need to challenge me and say that's way too high, and that's what you're doing, really. Yeah, I think $8 is quite an optimistic target. I am going to start taking profits. I've got my whole chart. I think $4.50, $5, $6, $7. By the time we reach $8, I would have taken most of my profits. I'll be keeping some for $10, maybe another 30% for $10 to $12, but that's just a very, very bullish case. Anyway, back to what is important right now, which is the retail investor implications. Remember, this is the FOMC meeting, the FOMC minutes that we're going to be diving into. So, base case, I'm assigning about 60% probability to this. We get September cuts and 2 to 3 cuts by the end of the year. That's the base case. That's what we're getting. Not best case, base case. So the 2-year yields fall to about 3.25 to 3.5% from about 3.72%. The 10-year yield drops slightly from 4.36% to about 3.75 and 4%. USD weakens modestly. That's the dollar index. Equities, growth stocks like tech outperform. Financials like banks may be pressured as their lending margins shrink. So we continue with our bull market. Credit, investment grade, IG bonds tighten while high yield is riskier. Crypto supported by risk on sentiment. This is the soft landing scenario. The Fed cuts slowly, inflation eases, liquidity improves, Expect tech and growth stocks to benefit, bond prices to rise, and crypto to find support. This is what we want to see if you're invested in the market and you want to see a cryptocurrency bull market, you want to see the stocks continue to go up, and you want to see an altcoin season. Unfortunately, there's only a 60% chance. It is still the most likely scenario, in my opinion. And when I say there's only a 60% chance, that's not official odds. That's what I'm assigning to it with the help of data and other analysts. But a 60% probability for this scenario. Everything continues as predicted. 2 to 3 rate cuts, that's still expected in the market. That's what we are still expecting, 2 rate cuts by the end of the year, possibly 3. That's still all priced in. 2-year yields falling slightly, 10-year yields falling slightly. The dollar index continues to come down. Equities like tech still outperform the markets. Banks may be pressured as their lending margins shrink. That might still happen, but you've still got the risk on sentiment, a soft landing. Inflation starts to continue to come down or ease. Rate cuts happen slowly and liquidity improves. So that is still the base case. Now we're looking at upside inflation. Now we're looking at the fact, is PPI going to go up and come into CPI? Is CPI going to continue to go up? Are we going to get upside inflation? Are tariffs going to stick? Expectations unanchor. I'm assigning a 25% probability to this. That's when we see 2-year yields rise above 4%, 10-year yields rise towards 4.7% strength. The DXY actually strengthens and climbs. Equities, value sectors, energy, commodities, industrials outperform. That's important to bear in mind. So even if we are going to have this bad situation, there is still parts of the market that will outperform. Keep an eye on that. Energy, commodities, industrials. That's why I hold gold and silver as my commodities. That's why I hold energy companies in my stock portfolio. And then you've got the industrials as well. Sort of the defense side of things as well. They will outperform. Growth stocks struggle under higher rates. These growth stocks, whether it's the small companies like SBCE or companies that borrow some money, or even going all the way up to a company like Nvidia, Apple, Amazon, even though the rate hikes don't really affect them as much, they will still struggle under higher rates. They still struggle under higher rates. They still borrow money. And then borrowing money is far exceeds how much interest they receive on their cash. So all growth stocks will struggle under this scenario. The credit spreads widen, making it harder for weaker firms to borrow, and crypto faces risk-off headwinds. Risk-off headwinds is basically people don't want to be investing in high-risk assets. Crypto is a high-risk asset. Growth stocks are high-risk assets, and we'll start seeing them decline. This is the sticky inflation risk. Tariffs push prices higher, forcing the Fed to keep rates elevated. That hurts tech/growth names and risk assets, but value and commodity stocks could shine. Cash and strong balance sheets matter here. That's what you're looking for. Cash and strong balance sheets. They will hopefully survive. Some will go under, and they'll probably outperform the ones with cash and strong balance sheets. That's the 25% probability. That's what we're trying to eye out, what's happening. That's why we're trying to keep an eye on what Jerome Powell says tomorrow. That's why we're keeping a very close eye on CPI and PPI live as it happens. I think it's 11th of September, because that's what's going to cause this scenario, which is obviously nowhere, it's not as good as the base case scenario. It's not actually a good scenario at all. And then here we go, the final 15%, downside growth, jobs collapse. This is the other thing we're keeping an eye on, unemployment going up. And I've assigned about a 15% probability to this scenario. The last scenario. Yields are falling below 3%, 10-year yields around 3.5%. The dollar weakens as recession fears mount. Equities, defense sectors, utilities, healthcare, staples outperform. Small caps underperform due to sensitivity to the cycle. Credit, the high yield spreads blow out as investors demand higher compensation for risk. Crypto likely sells off at first, it's risk off, but then benefits from aggressive Fed easing. This is the hard landing scenario. If jobs collapse, the Fed cuts aggressively. Safe haven assets like Treasury and defensive stocks will do well initially. Riskier credit and small caps suffer. Crypto may fall at first, but could rebound if easy money flows return. This is the scenario when unemployment goes up. Remember when we were looking at this table up here when we said what happens if the labour market collapses? Well, this scenario will happen when unemployment starts to go up. We go above 4.5%. Payrolls come down below zero for two plus months. That's when the Fed's reaction will be an emergency intermittent cut, aggressive easing cycle. So that is what will happen in this scenario. Emergency rate cuts, they're not good. Don't think emergency rate cuts are a good thing. They're a bad thing. It means the economy is collapsing. It means recession fears are mounting. It means people are losing jobs at a rate not seen in a while, not a good rate. But the caveat is that will probably cause a big correction, and because the Fed's going to be cutting rates, and then actually introducing money into the system, quantitative easing, then what you normally see is a V-shaped recovery. And in all of these scenarios, that's why I always say, have some money on the side, have some margin on the side, because you might want to take advantage of it. They don't come around that often. Every 5 years, every few years, you might get an opportunity like this. And if it does happen, the risks are quite low, I'm going to try. And if I'm not fully invested, and I hope I'll have some money, I'll be buying the V-shape. Or you never know where the bottom is, but you'll be buying on the days that you're down a lot. So this is all to get you to understand what these scenarios are. So you don't panic when you see the scenario. So you start identifying what happens. So you start seeing what all the big players are looking at. So you understand all this data. I hope you appreciate me coming out and really unpacking it for you. But again, this is all in the newsletter. And if you want to support the show, if you want to support me, if you want to get all the best news, go and subscribe to the newsletter. My one ask, go and subscribe to the newsletter. You get tickets for the giveaway. We'll be doing a giveaway within the newsletter as well. I've just announced that. I just thought of it. We're doing it. Giveaway for the newsletter people. So make sure you go and remember this is on a Substack, so you can comment, all that sort of stuff on the newsletter as well. Go and read it. Go and subscribe to it. You get all of this. This is all in the deep dive. We're not even done with it. But I hope it really starts to break things down for you. Stuff that institutions look at, that they pay people hundreds of thousands of dollars to unpack and understand. We're doing it free on the show, and if you want to support it and if you want to get it every single day, then go and support the newsletter. The link is in the live chat. It's also the first link in the description. Go and check it out. But these are the dates that you need to watch. 23rd of August. When is that? Tomorrow. Oh. No. I've got the wrong date. It's not tomorrow. Okay. I made a mistake. I made my first mistake. Why have I put the 23rd? It's definitely not on the 23rd. It's definitely on the 22nd. What have I done that for? I put it right here, haven't I? Yeah, it's on the economic calendar, on the newsletter's economic calendar at 3 p.m. tomorrow. Well, anyway, ignore that. I'll edit that. It's the 22nd. The jobs report, September the 5th, the CPI print on the 11th of September, and then you've got the big one, the FOMC meeting on the 17th to 18th. All of this is going to be covered live on the show, so you don't really need to know about it, but you might want to put it in your diary, so you make sure you tune in to the show, make sure you are subscribed and you've got your notification bell on, that way you won't miss a thing. Please also do hit the like button. But yeah, these are the dates, and then you've got the PPI again on September the 12th as well. I've done something wrong here. I've done... That doesn't make sense. Oh, no, it does make sense. I've just put them in the wrong orders. Anyway, those are some key dates to watch. And now, just on the final part of this, let's unpack some of the actual quotes from that big PDF of the Fed minutes. So I've tried to break these down. Current target range may not be far above its neutral level. The translation is, the Fed thinks interest rates aren't much higher than the neutral rate, the level that neither boosts nor slows the economy. This means there's less room to keep restrictive policy, which supports the case for rate cuts. A majority judged upside risk to inflation as greater. The translation is, most policymakers still worry about inflation going higher than about the economy weakening. This explains why the Fed isn't rushing into cuts, even though jobs are slowing. That's the problem right now. Remember, this is why they're not cutting rates. And they've literally said it. the risk about inflation is actually higher than the jobs risk right now. Yes, we've started to see unemployment going up, but it's only started. There's not enough data to back it up. What we are actually now starting to see is proper tariff data, inflation staying sticky. That's all now confirmed. So they're judging that the risk to inflation right now, in this very point, with all the data we've got right now, is higher for inflation than it is for the unemployment. What does that mean? Well, if they were trying to sort out unemployment data, they would start cutting rates. But if they're trying to sort out inflation, they'll hold rates steady. And what they're saying is the risk to inflation is greater, so they'll go for option number 2, hold rates steady. Tariff, and this is another quote from their minutes, tariff effects were becoming more apparent in the data. The translation: tariffs are finally showing up in prices. Inflation in goods like cars, electronics imports is starting to climb again, adding pressure to the overall inflation. Downside risk to employment has meaningfully increased. This means the Fed sees growing danger that the job market is weakening. Fewer hires, slower wage gains, and rising unemployment in sensitive groups are red flags. Tariff-related factors could lead to stubbornly elevated inflation. If tariffs keep costs high, inflation might not be able to fade quickly. That could trap the Fed between fighting inflation and supporting jobs. My biggest fear, probably their biggest fear as well. Committee might face difficult trade-offs if elevated inflation proved persistent while outlook for the labour market weakened. The Fed admits it could be stuck in a no-win situation. Cut rates could be risk fueling inflation, while holding rates high could worsen job losses. Are you starting to see what they're saying now? They are worried about what I've been worried about, and now they're actually admitting to it. They're worried that there is a no-win situation. They're saying they might face a difficult trade-off if elevated inflation proved persistent, and while the outlook for labour market weakened. They're even saying it's a no-win situation. Balance sheet reduction has been proceeding smoothly. Reserves abundant. The Fed's ongoing balance sheet runoff, quantitative tightening hasn't caused financial stress yet. Banks still have enough reserve and funding markets remain stable. We're still seeing quantitative tightening, no easing at the moment. Normally, we like to see quantitative easing for us to get that altcoin season. So maybe that will change from now in the next couple months. But right now, they don't see any issue with continuing the tightening. But this is one of the things we want to see for a crypto bull market. We want them to change from quantitative tightening to easing. That might require a crash, a recession, and then go back into the bull market. That might be what's happening. We'll unpack that in a second. I don't want you to take away too much from what I just said there, but I need to explain that a bit further. Anyway, great deal could be learned in coming months from incoming data. The Fed doesn't know which way things will break yet. They're waiting for more inflation and jobs data before deciding how aggressive to be. So these points, in my opinion, and I hate to spoil the fun, is probably what Jerome Powell is going to say tomorrow. All of these points. Inflation is probably a higher risk than the jobs market right now. We might be stuck in a situation where the job market data is bad and inflation goes up. We might be in a no-win situation right now. We're still going to be quantitative tightening because we haven't seen any stress on the banks yet. We're going to wait for data. Incoming data is what we're going to be using to make our decisions. Is he going to say anything? Well, there might be one or two comments, especially when he takes questions from the audience. I don't know if he will, but if he does, then that's when we might understand a bit more. But it's certainly worth watching in case I'm wrong about that and it's not just these key points. We're going to be covering it live on the show. The market is going to react to it, but what they're actually going to be reacting to is this, because in my opinion, this is what he's going to say. These are the main points I think he's going to say. So the market is going to be reacting to this information. So look at this information. How do you think the market's going to react to it? And then that's probably how the speech is going to go tomorrow. But those are the key points. We've digested a lot there. Thank you for staying tuned throughout that. If you want to go to specific points, whether it's the what risks equal what, and what are the risks? How do we know what the risks are? How do we understand it? And what would the Fed do? Go and you can go to newsletter and check out whether you want to see what my probabilities are for the different scenarios and what each scenario looks like and how to be prepared for each scenario. You can go and check out the newsletter, the key quotes, what I'm expecting Jerome Powell to say tomorrow. You can go check it out. And that's just one of the 5 stories we have, or one of the that's the deep dive. There's another 5 stories in there. Economic data, charts of the day. Go check it out. That's in this newsletter. I'll give you the link once again in the live chat. But there we go. Okay, so let me go into a few more stories as well. Let me get the poll out of the way as well. Let me see what the results of the poll were. Here are the results of the poll. So, is inflation... Oh, whose birthday is it? Is it Stacey's birthday? August the 22nd is my birthday. Matt's is the 25th. Oh, it's tomorrow. Tomorrow is Stacey's birthday. Well, that's great. Happy birthday for tomorrow. I'm sure we're going to celebrate that, Stacey. Thank you for popping back in to the show. Is inflation going to get out of control again? Well, 51% of you are saying yes. 30% of you saying no. 18% of you saying a little. So the scenario when inflation comes out is out of control is this scenario here. Upside inflation. Tariff sticks, expectations on anchor. That's when we get sticky inflation. That's the scenario here. And then obviously markets won't like that. They will correct, especially if they're growth stocks. Let's see if... yeah, that's fine. We're going to be going over to Martyn in a couple minutes' time. But let's see if there's any other stories we can cover in the meantime. Savage Faith Just Pray is loving it. Yeah, we can't wait to celebrate your birthday, Stacey. So Powell set to address rate cut expectations at Jackson Hole speech Friday. Federal Reserve Chair Jerome Powell would deliver a pivotal speech at 10 a.m. Eastern Time during the Kansas City Jackson Hole Economic Policy Symposium titled Economic Outlook and Framework Review. This is his last one, by the way, so maybe he'll throw us some curveballs on this one. So it's an annual event, I believe. As markets look for clarity on Fed's September rate cut intentions, the appearance also marks Powell's last at Jackson Hole before his term ends in May 2026. He steps into the spotlight amid conflicting data. July saw 73,000 jobs added, while downgrade revision erasing 258,000 jobs from May and June, pulling the 3-month average down to 35,000. Meanwhile, in the personal consumption expenditures index rose from 2.1% to 2.6% in June, pushed higher by lingering tariffs under President Trump. Market pricing now shows 85% chance for a 25 basis point rate cut in September the 17th FOMC meeting, down from 99% a week ago. And it's actually now down to 80%, so a big drop. Powell's remarks are expected to provide critical signals for investors ahead of September as the Fed faces a sharp dual mandate conflict. And analysts expect he may use this platform to propose a shift away from flexible average inflation targeting policy adopted in 2020 in favor of a more preemptive approach to managing inflation. Such a change could reshape the Fed's approach well beyond Powell's tenure, especially as inflation remains above targets and labour market indicators soften. Markets are bracing for either a dovish pivot that could trigger rallies or a cautious tone that might disappoint those betting on imminent cuts. So that's what I meant by Jerome Powell might want to do something for his last one. He might be looking for a new approach to managing inflation, and that might be his legacy he wants to leave behind. Crypto dropping like a rock. Well, we haven't even had a look at the markets. What are they looking like right now? We're getting ready for this event, and people are literally digesting this news that I'm bringing it to you. Not that I'm contributing to the S&P 500 going down, but as we're looking into data, they are also getting ready for Jerome Powell, and it looks like the sentiment is quite bad going into it. What is crypto doing right now? Remember, with XRP, I said August, everyone was saying we're going to get massive all-time highs in August. The SEC case is going to push it to all-time highs. I said, no. We're going to be realistic on this channel. I'm expecting August to be a sideways month where you test $3.40. We did. Where you come down to $2.62. So far, we've already seen $2.73. We might see $2.62 again for XRP in the month of August. That's what I've been saying. A range between $2.62 and $3.40. So that's been happening. Bitcoin, we said we're looking at a double top that could either be the end of the bull market, which we're hoping not, but could certainly bring us down. And since that double top, and we covered the all-time highs, but then we looked at the double top, and we said hopefully it's not a double top. But unfortunately it was. So whether this is a local double top and we just come down to 111,000, whether it's a more medium term double top where we come down to 106,000, 100,000, or if it's at the end of a bear market, we don't know yet. As I always say, be prepared for all scenarios. My base case is it all comes back down to what we just discussed in today's newsletter. There's 3 scenarios, and I've given you my probabilities on each of those scenarios. Where's it gone? This is why I say you need the newsletters to check it out. The base case, which is altcoin season, crypto runs, stocks run, all the good things we want to see. It's not the end of the bear market. I assign a 60% probability. So I still expect us to get all of that. Then there's other probabilities, whether it's upside inflation or downside growth. And that's when it could be either a more of a medium term bottom we're looking for, close to 100,000, or we're looking for lower targets, 60,000, 70,000 for a big bear market. But that's what's happening for Bitcoin. We've got Martyn's stream ready. Let me see what time that's going. That's going live in 4 minutes time. So we'll get ready for that as well. So yeah, Bitcoin is coming down 112,000. Its next support. If it does break down that, then we're looking at 106,000 once again. But that will be based on what Jerome Powell says tomorrow, which will probably be what he said in the minutes, which we just unraveled. So probably nothing as major as the market's pricing in right now. It's the stock market which is coming down really right now. It's the S&P 500 which is leading this, down 0.5%. Interestingly, gold is down as well. We covered this in the newsletter a few days ago. Sort of a medium-term bullish trend happening right now on gold. Big uptrend, rectangular consolidation. That normally means you're accumulating for your next move out. Whether that happens this week, next month, 3 months down the line, it is setting up quite nicely for that. Bitcoin dominance is getting a bit of a bounce today. What's happening in the stock market? We know Walmart had a bad earning. Oh, sorry, was it Target or Walmart? Target, I think. That's obviously hurt the markets a little bit. That was down 6% yesterday, and a bit flat on the pre-market right now. What else is happening in the markets? I'll go to your questions in a second. Martyn will be going live shortly, so stay with us. Thank you for everyone who's tuned in. Still 500 people watching. I do really appreciate it. Make sure you are subscribing and hitting the like button. Let's see if we can get to 100,000 subscribers in the next few days. We might do it tomorrow. We might do it. We don't know. Probably not, but it's always a chance. Never say never. Make sure you subscribe. And remember, anyone who's subscribed before 100,000 subscribers will be, and especially if you're engaging on all our different channels, like X, there's only this channel really, but I mean different channels. I mean X, our X's, me, Vaz, Martyn, our newsletter, our Discord, all those sorts of stuff. Get your name known, so you get extra chances to win. Also, the main prize, I'll give you the link now. I did forget to give it to you. Here is the link for the giveaway page. You can win $1,000 worth of XRP. This is done officially. This is measured and everything. So go check it out. $1,000 worth of XRP. You can win live on the show. It's not like the other giveaways you see on X. It's actually real. It actually happens live on the show. So please do go and check it out. $1,000 up for grabs. All you have to do is free to enter, free for all. You can win with just one ticket. You go to this page over here, and essentially there's some tasks for you to do. Some of them take a second, like subscribing to the newsletter, the free version. You press it, you type in your email, and you get 150 tickets. One is as simple as going and reposting a specific post on X. You might already follow Martyn on X, so why not claiming your tickets? You just claim your tickets if you've already done it. You don't need to unfollow and do it again. You just need to claim your tickets. So a lot of tickets for you guys to enter there, and then we'll be doing the giveaway in 25 days live on the show, and that'll be paid out in XRP. You can choose what you want to do with that money. Time to grab your surfboards. Things might get choppy. Yeah, it is going to be a volatile month, I think, especially with, we don't know what's going on with inflation. We don't know if unemployment's going to continue going up, and we don't know what Jerome Powell's going to say. What's your supports for XRP Sensei? $2.64. No, $2.62 or 64. Doesn't really matter. Definitely a hurricane coming. We're waiting for Martyn to go live. He will be going live any second now, and then we'll go straight to Martyn. I knew Target and Walmart would not have great earnings. There's a boycott going on, folks who generally spend a lot of money. Vanessa David Griggs, thank you for that information. Did you take advantage of your knowledge? Did you, maybe you don't like to short. I know you said you don't like to borrow money, so maybe you didn't short or anything, but just asking anyway. Can anyone trust jobs numbers anymore? What do you mean now that Trump's administration has got hold of it? I don't know. That's for you to decide. It's all we got to go off. Any other comments? Stacey, I'll be out of town tomorrow, so likely won't be there to wish you a happy birthday, says Vanessa. H-bar is a terrific buy at 24 cents. Thank you for that. I think you're right. Should be an 80% chance of no cut and a 20% chance of cut. Yeah, that's what it changes literally every hour. But yeah, that's what it is right now. Gold says yes, then he's getting ready for gold. Remember, it's a long-term trade. I'm not predicting what happens tomorrow or the day after. I'm looking at a 70-80% chance probability that we are in a continuation pattern right now. Okay, cool. Is Martyn live? I want to send you to Martyn as soon as he's live. I don't want you to miss anything. Yes, they do. No trust without verification. Maybe they can use Chainlink. Yeah, maybe they should. That's a great point, Tall Fart. Brilliant name as well, I guess. Just like CPI, I've always been calling it CLPIE report now. Oh, CPI report. I get it. Just like CPI, I've been calling it the CPI report. What's that website? Trueflation. I think they're now paid website. Trueflation. What's that saying inflation is? I think it's saying it's lower than it is. Keeping an eye on Martyn. Oh, Martyn's just gone live. I'll have a look at this another day. Martyn's gone straight into live. So this show will take you straight there. Martyn is live right now. You can either click that link and it'll take you directly there. This is the link for Martyn's show, or you can wait exactly where you are and it'll take you there. Here is the newsletter link. A big deep dive today. Lots of stories we didn't go through. But go and check it out. How good. I don't know what that means. Anyway, thank you everyone for tuning in live again tomorrow. I'm glad all of you enjoy the new setup. Take care of yourselves and each other. See you tomorrow. Go straight to Martyn. He's live right now. Tell him Sensei in his new studio sent me. Bye-bye.